Definition of finance. Finance is the field that deals with the creation, management, and study of money, investments, and financial instruments. It involves how individuals, businesses, and governments allocate resources over time under conditions of uncertainty. Key elements of finance. 1. Money management, earning, saving, spending, investing. 2. Investment, putting money into assets to generate returns. 3. Credit and debt, borrowing money and managing repayments. 4. Risk and return, evaluating the potential gain versus the chance of loss. 5. Financial systems, institutions like banks, stock markets, central banks. In simple terms, finance is the science of money management. History of finance. Finance has existed in some form since the beginning of civilization. Here's a timeline of how it developed. Ancient finance, 3000 BCE, 500 CE, Mesopotamia and ancient Egypt, circa 3000 BCE. The earliest records of finance come from Mesopotamia, where farmers borrowed seeds or livestock with repayment after harvest. Clay tablets were used as financial records, precursors to contracts. Temples and palaces acted like early banks, holding grain and valuables. Ancient Greece and Rome, 600 BCE, 500 CE, coined money was introduced, Lydians, then Greeks and Romans. Rome had a developed financial system with loans, credit, and money changers. Legal systems were created to regulate transactions, which laid the foundation for modern financial contracts. Medieval finance, 500 to 1500 CE, rise of Islamic finance, interest riba was prohibited. Alternative financing methods developed, profit sharing. Waqf, charitable trusts, played a role in economic management. European developments, growth of banking families like the Medici in Italy. Introduction of bills of exchange, which allowed merchants to trade without physical money. Double-entry bookkeeping was invented in the 14th century by Luca Pacioli, a foundational financial system still used today. Early modern finance, 1500 to 1800. Birth of central banks. The Bank of England was established in 1694, one of the first true central banks. Governments issued bonds to fund wars and exploration, e.g. Dutch and British empires. Stock exchanges. The Amsterdam Stock Exchange, 1602, was the first official stock market. The Dutch East India Company issued the first publicly traded shares. Industrial Revolution, 1800 to 1900. Explosive growth in businesses and industries created new demand for capital. Expansion of commercial banks, insurance firms, and stock markets. Rise of investment banking and financial conglomerates. Modern and contemporary finance, 1900 to today. 20th century creation of financial institutions like Federal Reserve System. 1913 USA International Monetary Fund, IMF and World Bank. 1944 Great Depression led to major reforms in banking and finance. Glass-Steagall Act in the U.S. Financial theories like O-Modern Portfolio Theory, Harry Markowitz, 1952, OCAPM, Capital Asset Pricing Model, O-Efficient Market Hypothesis. 21st century, rise of fintech, financial technology, mobile banking, robo-advisors, digital wallets, growth of cryptocurrencies like Bitcoin and Ethereum, globalization of finance, capital flows freely across borders, increasing focus on sustainable finance and ethical investing, ESG. Summary finance has evolved from simple bartering systems to today's complex global markets. Its core purpose remains the same, to help individuals and organizations allocate resources efficiently and manage risk over time.